Greetings, ladies and gentlemen. Hope your day is good. Today, I want us to learn about some directive that was made by the central bank on 25th of August, but banks have started implementing it 5 days ago. When I say banks, I'm singling out Equity Bank has started implementing it the beginning of December, and I thought it is good I bring it to your announcement. This is in regards to how they charge loans. And allow me to read that on 25th August 2025, there was a directive by the central bank about how loans will be charged or will be charged. And Equity Bank issued the following guidelines that all new local currency variable rate loans effective 1st December 2025 will be priced under the revised risk-based credit pricing framework. And the next one, existing local currency variable rate loans shall transition to the new pricing framework by February 28, 2026. So if you have a loan, you already have a loan, it will start getting the new interest rates come February 28. If you are taking a new loan, come 1st December, it will be charged a new interest rate. For loaning, most of the times banks have been lending on a general assumption. They say the treasury bill plus the risk, overall risk for an average overall risk for customers. Now they are saying they will be charging customer based on your risk profile. So I'm trying to imagine there are some customers who will benefit from this. They may have a lower interest rate. Others will be hit by this. Their interest rate will be quite high. When that happens, I want to tell you this. You need to be careful when you want to borrow money. Ask yourself, what is my risk profile? The bank will give you. And when it comes to loaning or when it comes to borrowing money, SACCOs are the cheapest, followed by banks, followed by chamas. You come to microfinance institutions, Shylocks are the worst or they are the most expensive. Most of us, we are not able to borrow money from SACCOs because you do not have deposits. Chamas, you can borrow money from it because the interest charged by Chamas still come back to you as dividends because the owners of Chamas are still the borrowers and the lenders. For Chamas, that is your personal view whether you want to borrow from your Chama or not. Let me not get into that. If you can check whether this loan is affordable. If you find that the interest rate that you've been given by your bank is not affordable, don't go to a Shylock because that one will be like jumping from frying pan into fire. Or don't go even to an institution. I've given you the ranks, the way they charge. Don't go to an institution that charges higher interest rate than the commercial bank. If you can go to a SACCO, well and good, you can be bought from that bank, get into the SACCO of your choice. If they can buy you, well, that is good. What I want also to bring to your attention, loans from commercial banks are still the most accessible loans in this country. Reasons, they are the ones that give loans the fastest possible. They give faster than SACCOs because there is a process that you will involve in SACCOs like getting guarantors, charging if you are not using guarantors. There is a process that you will do, and for banks most of the times it is quite fast. So that is one. They give loans using the longest period. You can go to a bank and take a loan for 10 years. SACCOs that can afford 10-year loans in this country are very few. I know the likes of Stima SACCO are there, Kenya Police, Harambee. There are not many SACCOs. They are countable. I know if I have left out your SACCO, no, it is still on the list of the countable SACCOs. The third aspect, and this one you can all agree with me, SACCOs cannot be able to issue huge amounts of loans as opposed to banks. You go to a bank and you want a loan of 100 million, they will lend you. SACCOs, even the biggest, the Kenya Police SACCO, 100 million, they may not be able to afford to lend you. So when you are borrowing a loan, you ask yourself, what is the purpose of this loan? If, for example, you want to start a business that could generate you, let's say, 100,000 shillings a month, and you want to borrow a loan that you will pay 600,000 shillings in 6 months, you consider the amount that I will pay in terms of interest vis-a-vis the amount that I will lose in terms of business. Which one is more? If the business loss is bigger than the loan interest, then go and take that loan. Somebody may be finishing his apartments and you need money so that those apartments can be occupied. And the only option there is a commercial bank. Go and get that loan. Remember, financial literacy is about doing your calculations and seeing where do I benefit most. If you will benefit by taking a loan from a commercial bank, I am not here to tell you do not take a loan from a commercial bank. Take a loan, but make sure that you have all the facts with you. As I say, SACCOs remain the cheapest source of lending, but there are other considerations you will make before you take a loan. Let me stop at that. Wish you well.